This is Shelley Craft coming to you live on SNNLive. We're at the 2016 LD Micro Invitational in Bel Air, California. I have with me Michael Peterson of Pacific Energy Development. It's a publicly traded company, and the symbol is PED on the NYSE. Michael, welcome to SNNLive.
Thank you, Shelley. It's good to be here with you today.
It's good to have you. I would like to start with an overview of Pacific.
Well, Pacific Energy Development is a oil and gas developer. We're in exploration in the Weld County area of Colorado, also known as the Wattenberg Core. We currently have 61 wells. We're producing about 250 to 300 barrels of oil equivalent per day. We are the operator. That's what we do very well. Is we come in, we operate at low costs and find and develop the resources. We've been a public company since 2012, and we trade on the NYSE market.
It's been a tough go with the oil prices. You know, you seem to have survived well. It's been a tough market. What's been your secret to success?
We have a very strategic management team, and we understand the markets. So the founder of our company, Frank Ingrasselli, actually was negotiated the very first oil well out of China in 1984. So we've been around the markets a long time, and we know what we're doing. We've got a team that really developed the whole Eagle Ford market, and now is a part of us, and they've drilled over 500 wells. So we know what we're doing. We've made some strategic moves. When oil was at $100, it was very easy. But that time, we've kind of bought some more assets. We sold assets. We just recently announced a big restructuring of our debt and a new fundraising that we brought into the company that really gives us the runway to be able to take advantage of the opportunities now with oil prices low.
Well, but they're a little higher than they were. So it's kind of like showing a little signs. But where do you think it goes from here in general? And how does a lower price or a higher price affect your company?
Yeah, that's a great question. I dream about that every night, actually. So, you know, when prices went to $28 a barrel, we were running at about an 18% IRR. The area where we are, which is the DJ Basin, is the highest IRR basin in the United States. So when oil prices came down, it was able to stay active. Even though we've lost a lot of rigs, we were still able to make money. So now with prices back to $50, we're back to the 30 to 35% IRR rate, so we can still drill. Now, it's not like the 50% IRRs we were having back at $100, but it's enough for us to really build a company and in the right areas. Now, it's interesting. We have 72 different sections that we could drill in, but really only about 5 to 10 of those sections are profitable at this price. And I think what's happening is a lot of companies have no sections that are profitable. And so as oil prices continue to move up, you'll have more and more opportunities come, and we'll take advantage of those as well going forward.
It sounds to me like you're sticking in your backyard where I guess from seismic to,
Sure.
I mean, it doesn't seem like you're going out and looking where it might not be.
We are not wildcatters. That's absolutely right. We are developers. We want to go in where we know there's oil. And in fact, my first time, I asked our geologist, our first well, I said, what is the percentage probability that we're going to hit oil? I was really worried about that same question. And they said 100%. There's oil. It's just a matter of how much we bring up. And so nowadays, with 3D seismic, obviously you know the industry well, you know where every little pocket is. And we go in where there's the best, kind of oil pockets that we see, in our case, where the oil is more mature, and we can see that through different testing, and we kind of get a good feel beforehand how much oil we're going to have.
I learned to ask, who your neighbors are, because sometimes there's elephants in the woods, and it kind of also gives you an opportunity to make acquisitions where they ain't. So I'm just throwing that out as a question.
Well, that's a great question. And if you take a look at where we are, Noble, Anadarko, Synergy, Bonanza Creek, they've all built their business, and we're right there amongst them. And we actually share acreage with them. These next two wells where we're drilling, Anadarko and Noble and Canna are right there with us. And it's a great place to build a company. They've all built their companies there, and we're doing the same. We're much smaller, so we have to be more nimble. But there are opportunities. There are opportunities right now with oil prices where they are now. Prices have come down. Farmers who thought they were going to get rich now are willing to maybe make some changes and sell, and prices are starting to rationalize. And that's one thing we're looking at, is adding better acreage to what we currently have.
Well, it also seems as if you have development history, and it sounds like, you know, you put together a team that, you know, obviously you know where it is, you know how to bring it up, you know how to get it efficiently, and you can work with the pricing, correct?
Absolutely. I'll never forget Synergy a couple years ago in a presentation in San Francisco said, we've got this great little company, Pacific Energy Development, who are developing some wells. We're really interested on what they're doing. You know, they were watching what we were doing, because when we came into the basin, the average price at that time was $4.5 million a well. We came in a small little company and we drilled it for $3.9 million. And people were looking like, who are these guys? The next well, we set a record from speed of spudding when you start drilling to total depth. We set a record of everybody in the whole basin. And again, people said, who are these guys? So our team has drilled over 500 of these wells, and they know exactly what they're doing. And the operation side is really where we make the biggest impact. We bought some acreage from a very big $20 billion company, and we immediately were able to drop their LOE costs by half. Currently, we're looking at companies who are spending $9 a barrel in differential pricing, and we're below $5. And we look at their LOE, the lease operating expenses, and we're about half. So being small, I think sometimes you're able to be more nimble, you're able to understand costs. This business of shale is not a big company business. This is really a small company business, and you have to have a small company mentality to really come in and do the costs that you have to really make it profitable.
Michael, let's get your website out there if you would.
Great. It's www.pacificenergydevelopment.com, or if you want to type less letters, it's www.PEDEVCO.com.
Ladies and gentlemen, Michael Peterson, Pacific Energy Development. It's a New York Stock Exchange listed company. The symbol is PED. I'm Shelley Crabb. This is SNNLive, and we're coming to you live from the 2016 LD Micro Invitational in Bel Air, California. Michael, thanks for coming on to SNNLive.
Thank you very much, Shelley. It's been a pleasure.
It's been good to have you.